Ooh, is it on?
Oh, hey guys, welcome to the Day Worker Night Trader channel. I'm here to show you how you can make thousands of dollars just by spending 1 hour a day on the financial market, because you still have a job, a life, and hopefully a girlfriend. Recently, I realized that many of my friends who are in their 20s and 30s are looking for a place to start to learn about investment as a way to generate a second stream of income on top of the day job. Therefore, I would like to make a quick series to hopefully share with you what I have learned from my own experience and from the internet, so that you can start making money even today. The channel is very new, so I appreciate your help to subscribe to the channel and give a thumbs up to this video. If possible, please also ask your mother, father, brother, sister, neighbor, girlfriend, boyfriend, exes, and even your insurance agent to smash the subscribe and like button. In case you have not had a broker account, I highly recommend you to use Interactive Broker. This is a platform that I use, so in the future you are going to be familiar with the interfaces because I'm going to share what I'm doing quite often. The commission and fee is super low, while allowing you to buy a lot of things such as stocks, bonds, options, futures, and index funds, and it also allows you to invest outside of the US, in Hong Kong, China, or even in Europe. The best thing is, you're able to earn 1% value of your first deposit, up to 1,000 free worth of Interactive Broker stocks. This 1% is already your first month of investment return in your account at the point of creation. After you get the Interactive Broker stock, you can actually sell immediately to cash in and buy whatever stocks that you like. So this is a very good deal for now. Now, without any further ado, let's learn to make some money.
I got broads in Atlanta, just to throw me in the family. Credit cards and the scammers, getting the licks in the bank. Legacies.
Hey guys, the first chat that I wanted to have is on a very important topics that I feel is very underexplained by a lot of YouTubers as well as new to investment materials online. Know yourself. I truly believe that this is the most important thing that you should know about, because just like any other things in life, be it picking a job or picking a life partners, you do the best and are the most happy when you do what suits you as a person. Yeah, that sounds about right. From my own experience and research, I find that you can identify your preferred investment style by considering just two factors. Number one, time spent trading and investing in the market, and the second thing is risk tolerance. The first thing I wanted to talk about is time spent trading, investing, right? This is essentially how much time that you want to spend per day on trading and investing. If you can spend at least 1 to 2 hours a day, 5 to 7 days a week, you're more on the active end. And on the other hand, if you can only spend 1 hour a week or less, or just once in a blue moon whip out your phone and check how your investment portfolio is doing, you are more on the passive end. And some of the factors that can help identify your time spent trading and investing in the market could be: number one, your personal priorities. So probably you are a winner in life, you have a job, you have a life, you have a girlfriend, you have a family. That's why you can only spend about 1 hour a week or even less, and that's perfectly fine. But on the other hand, if let's say you are a first jobber, or you are a student who can spend 1 to 2 hours a day, 5 or 7 days a week to learn investment, to have a head start in life, that's also a great thing to do. The second item is actually on opportunity cost of time spent trading and investment. You might be in a stage of your life where time spent elsewhere will make you much happier or even earn you more money in time spent in the market. So for example, if you are a last year university student, or you just start your job and still under probation, you better spend time getting a good job or passing your probation so that you can secure your paycheck towards your first 100,000. Now the second thing is about risk tolerance. So for the people who have very low risk tolerance, you take out your phone and you see red and you start to freak out. No! Probably you're going to be someone with a very low risk tolerance. But on the other hand, if you take out your phone and you see a position that is deep in the red, but because you have the conviction in your trade and you have done your homework well, and you are still able to sleep well,
this is fine. I'm okay with the events that are unfolding currently.
probably you're someone with a much better risk tolerance. So similar to time spent in the market, your risk tolerance level might be depending on some factors. The first one is your personalities. Some people just want to play safe, but some people want to go for the high risk, high reward. People whose middle name is dangerous. I'm talking about you. Your risk tolerance should also depend on how much you can afford to lose. For example, you are someone who don't have any much of the money on your end and you have a lot of dependents. So for example, your parents, your siblings who depend on you as a sole source of income. My advice is that you have a very, very, very low risk tolerance. Don't gamble with your siblings' college fund. Don't gamble with your own college fund. And don't gamble with your parents' saving. Please, 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 I beg you. If you have a few hundred thousands in your bank account, you already have a house, your parents are financially independent, and you wanted to see what you can do with 50,000 right, in the stock market, yes, probably you can have a higher risk tolerance. So if you put these two together, you actually have a very nice chart over here. Here are some of the investment form and investment strategies that I find suitable for you depending on where you are on this chart. So number one, let's talk about people who are passive investor. So of course, right, probably you should be investing in safe investment like blue chip companies or even SP 500. SP 500 actually beat a large majority of performance of hedge fund over the past 9 years. And this is a very famous example. You can just go and Google online. I wouldn't waste time talking about it. And in the past 5 years, right, SP 500 actually doubled. So you actually make a very nice year-on-year return if you just want to invest in SP 500. If you're someone who can tolerate more risk, which is more variations, more up and down in the market, actually you can look at tech stock, you can look at things like growth, ETF, and so on. For now, right, I would recommend you to just go to Google and YouTube and learn more about the things that are below here. So as of what I'm doing personally, I'm having a mix of a passive strategy as well as a moderate active strategy, because I still have a day job. I want to spend some time with friends and also time with my girlfriend. NASDAQ and tech stock is my favorite because I truly believe that technology is the future. Growth ETF, growth and penny stock and quality specs are also my favorite investment, and I have gotten some successes in the past, but I do feel that this is a whole important topic that I can do in a future video. One of the things that I truly like is selling weekly and monthly option. Of course, the option is going to be covered and secured. For me, I think this is a very nice strategies for passive investors who want to make some extra income along the way, and also this helps to shield you from the volatility of the market. Option spread is something that I'm looking into, but hopefully I have some promising results with it, and I'm going to share with you more in the future video. If you have any questions on any of these terms, feel free to leave it at the comment box below, and I may consider doing a video just to address your specific comments, or I can just answer your question in the comment section. Now, what are some of the actions I would recommend? The number one thing is truly, you should treat investment as serious as your second job. Give it some quality time, and most importantly, do your own due diligence. First reason is you work so hard to earn the money. You should work as equally hard to grow it and to not lose it. And the second thing is that at the end of the day, stock market is still the market with buyer and seller. The way for you to make more profit is to be a better buyer and a better seller. And the only way that you can be a better buyer and seller is to treat investment more seriously and go and learn more about investing. Which means you should subscribe to my channel and like this video. Now let's move on to the second action. Create a broker account. Start today. Create an interactive broker account following my link over here. The next action that you can take is start as a passive and low-risk investor, because at the end of the day, your SP 500 has doubled in the past 5 years. Last but not least, experiment active high-risk strategies with small amount of money. This gives you pretty much a good idea of what suits you as well as what don't suit you, so that you can figure out one of the best strategy for you to stick with it over the long terms. That's it, guys. Hope you have had a great time. If you find my video helpful, please ask your mother, father, brother, sister, neighbor, girlfriend, boyfriend, exes, and even your insurance agent to smash the subscribe and like button.
Stop it. Get some help.
So that you can be the first people to get your hands on the next two videos that I'm planning to upload in the next 2 weeks. The first one is some of the financial advices online that you have heard but you need to think twice about. And the second video is about how I made a few $1000s a week selling option. That's it for today. See you next time. Bye bye.
Panda. I got broads in Atlanta, just to throw me in the family. Credit cards and the scammers, getting no licks in the bank. Legacies.